Hey, good morning, everybody. Welcome to another day on Market Report brought to you by Mike Bjork. Today is Thursday, April 10th. We got a couple economic news releases. We'll start off with the weekly jobless claims. So last week we had 332,000 people apply for unemployment. The forecast for this week is 316, and it came in at 300,000. So a really good number right there at 300,000. This is actually probably one of the best we've seen in about 7 years, so quite a while. We also got the import price index. Not a huge data, but it's just one of the data that were released, so we'll go ahead and mention it. We had a 0.9% increase for the month of February, and the forecast was supposed to taper down to zero point 0.2 in March, and it was at 0.6, so a little bit higher than the forecast. So we'll jump over to the headline news here. And right now, the stock market's down. It's actually way down quite a bit today after a little bit of a rally when they released the FOMC meetings minutes. They kind of forecast that there's really no news that really surprised them. I think it's just that they kind of paint a rosy picture that economy is going to grow, but not at an alarming rate or anything. It's just going to be at a steady rate. Jobs will improve. There's no mention really as to the 6.5% in the interest or the unemployment rate for the So basically, in line. So the market reacted well for it. But today's a different notion because a lot of it's just earnings reports coming out today, and then there's some data that came out with China that the trade that it's slowing down. That this is raising concerns since they're the largest trading partner. So this is what's kind of setting the tone today. So we'll jump over to the bond market, and here's what we're looking at. So as a result, the bond market's actually coming in really well. Yesterday we had, sorry about that, folks. So we have another huge opening gap, but we're also way up. We haven't been at this level quite a bit. Remember, yesterday was the opening gap was due to bond rollover, which is about 27 basis points. So if we look at today, this would really be about over 105 today. So these are numbers that are it's looking really robust for us on the bond market. So rates are showing some nice improvement. So just from yesterday, we have about over 40 basis points, 44 basis points up. So it's great news right there. All right, so hang in there. But at some point, this opening will close. So don't be surprised we have some correction where it'll close up because we can't have a steady improvement in the interest rates. With these opening gaps here, it creates unstable. So we may have a sharp one, but at some point it's going to come back and close up before it can go upwards a little bit. All right, folks, so take advantage of it. I would lock in today if you have anything floating out there, and enjoy the pricing today. All right, you guys have a wonderful day. Thanks for watching, and we'll catch you guys tomorrow.